Hey traders, Philip Tankerson here from Stock Market Strategy. Before I start, I just want to say that trading involves risk and hard work, so please do your own due diligence before trading for real money. Today I'm going to talk about rounding bottom. I will explain the requirements for this chart pattern and how to spot them. Furthermore, I'll explain the psychology behind the pattern and in the end show you how to trade the rounding bottom. If you go to our website www.stock-market-strategy.com, you'll find a tab called Education, Chart Patterns and Rounding Bottom. Here you'll find a written explanation about rounding bottom, including two charts, one showing you how to spot the requirements and one showing how to trade the rounding bottom. Rounding bottom is a reversal pattern, meaning we'll be looking to catch the beginning of a new uptrend. The rounding bottom is a real-time tool, whereas an indicator is lacking. This is one of the reasons why this pattern is very popular. The rounding bottom is used most on a weekly chart. Here I'll show you the requirements. First, we need an established trend prior to the rounding bottom. We got one outside the chart, but I couldn't add it, otherwise the chart would be too compressed for you to see what's going on. It's very important that we have a prior downtrend, otherwise there's no trend to reverse. And this is a reversal pattern. Second, we got a left side decline, which then ends at the low, which is number 3 here. And then we got a right side incline. And it's very important that the right side incline is equal with the left side incline in time value, going from the low to the beginning and from the low to the end. Here we got 23 months on both sides of the low. So the left side decline is the same time value as the right side incline. Fifth, resistance. We don't always get a clean and well-defined resistance in a rounding bottom. Not like as double bottom, for example. But here we got a resistance point from over here. And we get kind of a test here before we get the real test and then breakout, which is number 6. This pattern is not confirmed until we see the breakout. I like this pattern because I understand why it works. It uses psychology in trading because you can see when other traders are in emotional and financial pain. Here's an example. We have this downtrend here. People are going short on the way down. It then forms a long consolidation, a rounding bottom. Starts climbing. And when it climbs over here and takes out the resistance, everybody who went short here is definitely underwater. They're losing now. And this adds to short covering and panic. So this pattern feeds on losing traders. Rounding bottom can be used for both analysis and trade entries. I'll show you the entries later, but first let me show you how to use it for analysis. Here you see the heavy construction sector. You see that we have a down move here, a downtrend, which ends in 2002. That's the low of the rounding bottom. This rounding bottom is confirmed when it closes above resistance in 2004. So when this happens, you will only be taking long plays in this sector. So if you find a weak stock in this sector, there's no reason for you to go short because the sector is strong. It's better to find a weak stock in a weak sector. Okay, now you've seen how to use rounding bottom for analysis. Now I'll show you where you can go long. The first one is when we get a confirmation of the rounding bottom, meaning a close above the resistance. This has a high hit rate and a decent risk to reward. The second opportunity has a higher hit rate and has a good risk to reward. It's when you got your pullback down to the breakout area. So what were resistance is now support. The problem here is that you might miss the entry as the price don't always pull back. Like in this situation, the price doesn't come all the way down to your breakout area, so you miss this trade. Okay, I've shown you where to go long, now I'll show you how to go long. The first opportunity is by the book. It's this one. It's simply a close above the resistance. So when we get the confirmation that it's a rounding bottom, that's your entry signal. The second one, despite not coming all the way back to support, I'll show you how I would enter it if it had come back to the support. Support means there's buyers down here, either new buyers or people who need to short cover. So I'll be looking at a bar which shows me buyers are coming in. This
bar here where it opens up here, move down, then it moves up again, showing that there's buyers pushing the price up, and then the bar close here. Because the bar didn't close all the way up again, I'm waiting for a little bit more confirmation, a little bit more evidence, and that is that the next bar moves above the prior bar. This ends today's video. I hope you enjoyed it. Please remember to subscribe to the channel so you don't miss out on future videos.